Investors and traders, welcome to the channel Market Chart Pattern. Today is the 25th of March 2025. Hope everyone is having a great day. We will take a look at the key markets in this video segment, with the main focus being on the US equity markets. As always, this video is for educational purposes only, and it is not a financial advice. So before we begin to get into the charts, I just want to show you one thing. I am developing a system, and in that I am looking at a lot of data and produce reports on daily basis. Some of the subscribers are actually asked me to put me on the distribution list. It's free. It's for educational purposes only. It's free for now. And if you're interested, you'll find the contact details in the description of the video, so you can email me and I can add you to the distribution list as well. And if you don't want to be on the distribution list any longer, you can always email contact, and you'll be removed. But just to give you an idea of what kind of things we are looking at, for example, this is one of the reports in which these are the major indices such as the German DAX. This one is the French CAC 40 index. This is of course the NASDAQ 100 cash. Japanese index, S&P 500, Dow Jones, VIX. This is the Hang Seng index for Hong Kong market, and this is the VXN. This is similar to VIX, but this is with reference to the NASDAQ 100. This is volatility index for NASDAQ 100. So basically the report produces at the end of each trading day what sort of daily returns we have, the weekly returns for example. So this one we can see that the German DAX was actually top performer in terms of the major indices that we are tracking. This one is missing the index for the FTSE 100, which I will add. So we'll have the major European indices as well. So the German DAX was up today 1.13%, and 1.08% is the French CAC, and the NASDAQ was up 0.5%. Japanese market also did well. As the kind of key insights we can gain is that we can see that the VIX actually closed lower, so this is an indication that the volatility in the market is kind of dying down, and VXN was down by over 3%. And if we look at the weekly returns, so this is the returns as of the close of last Friday till today. We can see that NASDAQ 100 cash is up by 2.7%, and it seems to be outperforming the S&P 500, the Dow Jones, and even for the German DAX as well. Of course, we are only in Tuesday, so we have to actually look at towards the end of Friday. But there you go. This is the kind of insights that we get. For example, you can see that the Hong Kong index, this was actually down today, but in Europe we did not have a down a week thus far. There we go. And if we take a look at the month to date returns, this is actually showing something really interesting. So these are all the US indices. This is the NASDAQ 100, Dow Jones Industrial cash, S&P 500 cash. They are all in negative months to date. But if you look at the European, the German DAX is the winner with being up 2.48%, the Hong Kong index 1.76%, and the even the Japanese Nikkei up as well. But if we just take a look at this year-to-date returns, this is something really interesting. Look, while the U.S. markets such as the NASDAQ 100, S&P 500, and Japanese market as well, they are down for on the year-to-date returns. The money has been flowing into the Hong Kong HSI, which is the Hong Kong Shanghai Index. So the Chinese stocks, the Hong Kong listed stocks, this is where the money has been moving, and also the money has been moving into Europe. You can see the German DAX is up by 16%. So Hong Kong index and the German DAX are kind of in a tie, and then this is the CAC 40. This is also the French index is up nearly 10% year to date, whereas you can see the US indices, they have taken a tumble. So this kind of is a really interesting insight that we can actually take a look at. from these reports, and I'm building more and more of these analytics. These are in report form as of now, as I'm building my system. And if you like to be on the distribution list, then of course contact me using the email in the description. And then to show you another report, for example, this is another report in which we basically take a look at the top 10 stocks which are for example, which outperformed the S&P 500 today. To give you an example, today the S&P 500 cash closed 0.16%, but then there are stocks which have significantly outperformed. And if we begin to look at these lists on a daily basis, then we begin to see that there are certain stocks which are actually getting stronger, and they are consistently beating the index itself. So for example, this is I think international paper. I wasn't even aware of this company. We can have a look at it later on, and it has something has happened here, so it's just outperformed quite massively. And then Tesla, of course, is the ongoing story. Yesterday Monday was up, last Friday was up as well. This is the Freeport McMoran, it's up, so something is happening in the mining side of things. And this is the CrowdStrike, I believe. This is Fox News Network, I believe. And then the cybersecurity, so Palo Alto Network, it's a really interesting chart pattern as well. We'll take a quick look. Netflix is back into it, and returning 2.6%. So it's quite interesting to have a look what is going on. And then I also have the month-to-date returns, so you can see some of these stocks have been actually beating the market. So that's quite interesting. These are the kind of insights we can gain, and then it'll just help us to take a look at certain stocks as well. What sort of chart pattern we could be looking at. So for example, if we take a look at Palo Alto Networks, it is something that we do not look at in our video segments. But if we just take a look at this stock, it's a really strong uptrend. You can see this really nice trend line. It does have the tendency to pull back right in this trend line, and then it just bounces back and go and make new highs as well. So recently it did that beginning of March. Now it's right at this point where it has taken out the highs of 19th of March. Let me be sure, 190.10. Yes, it has, with the price being above the 20-day moving average. Momentum is improving. So what it did was it pulled down right towards the 200-day moving average, right in the trend line, and seems to be getting momentum from here. So really good insights we can get from the data, and I will be developing other matrices as well, and moving into other markets and developing analytics as well. And at some point for the subscribers might actually put it on the web as well, so people could access it. But right now end of day reports are available. Okay, so with that, let's actually take a look at the markets, and we'll start by taking a look at the US dollar. Here we go. So the US dollar has gone right into the market symmetry. This is the previous this is how much we have seen the market rally. I think it will rally a little bit higher, maybe get up to this 20-day moving average. I think that should be a pretty good resistance point, because it broke below the 61.8% retracement. I think it's going to 102, which is 78.6% retracement. And if we take a look at this on the weekly chart, of course the week is young, so it's just begun, it's only Tuesday. Fairly weak price action right here as well. On the flip side, if we take a look at the Euro USD, you can see it's just pulling back a little bit, nothing too much. And then if we take a look at this on the daily chart, this is where things are a little bit more clear. Let me get rid of the volume, and here we can see that it's also pulling back right into this 20-day moving average. I think it's going to find some support right into this level, 107.67 to 107.27. which is where we have the 200-day moving average as well. So most likely just gonna go and find support there. But if we were to just take a retracement, I believe we have the 38.2% retracement nearby. Okay, so it comes a little bit down towards the 200-day moving average, 107.25. I think that will be a level of good interest, because we'll have a confluence of 200-day moving average, as well as we'll have a 38.2% retracement. But from microsymmetry, I think it's likely to gain some sort of support right here between the 20-day moving average as well. So getting into a spot where we should see some sort of good support coming for the euro. British pound, you can see it's pretty strong and stable. The 20-day moving average is keeping it afloat. We saw a little bit of consolidation after hitting the 1.272 expansion, and of course the 1.30 psychological level. It could just remain in this consolidation for some time, and maybe I think we could get a trigger like this, like a big range bar, which eventually begins the momentum to the upside again. This is what we are looking at in the British pound. And a quick look into the Japanese yen. It went right towards this region where we have the I believe it was the 38.2% retracement around here, so getting close to that level. Yep, it came pretty close, missed it by a few pips actually. So let's see how it closes tomorrow, but looks like a weak rally, so maybe the Japanese yen is going to get stronger. Okay, now let's take a quick look at the 10-year yield, so TNX, and you can see that it tried to rally, but today wasn't where the yields have actually pulled lower, so that's interesting. It did look like a rally which was going to actually fail, because this is a market symmetry concept, right? So it's still in play. There you go. And because of this, I was thinking maybe it could rally up to 38.2% retracement, or 4.37% on the yield, and looks like this is where the yields might actually begin to move even further lower. And if we take a look at the shorter end of the curve, which is 2-year, yeah, just finding resistance from 38.2% retracement, just going sideways. And then let's take a look at the ZN, which is the 10-year Treasury notes. Here we go. So it basically, I think it might have made a double bottom right here, so it needs to actually gain some traction to the upside. If it's able to break out of this triangle, that's gonna be a pretty explosive move, because one of the things about these triangles, pennants, and what I like to call the dynamite triangles is that once there's a breakout that happens, and it's pretty explosive. So if it's able to break above this, it's going to be a pretty explosive move. If it breaks down from here, it's going to be pretty explosive. But since it just touched this bottom, took maybe some of the stops out, it looks like maybe it wants to go and break to the upside. So we'll wait and see. But looking at the TNX, I think the yields are likely to be moving lower. And if we take a look at the ZB, you can see it broke the trend line. This is something I do not like, but it is getting some support from the 89 period moving average. But if ZN is going to move higher, the longer end of the curve should actually also the yields move lower. It would be very interesting if it would not happen, because that would be a very different kind of situation in the yield curve. Gold. So this is gold is really interesting. So there we go. So what we are looking at is just gold consolidating right into here. This is what we were talking about, this pattern. We have seen the gold market go actually nowhere. So now at one point there was a correlation between the gold market, the dollar, and also the 10-year. I'm not sure whether the correlation exists, but from this pattern perspective, I think there is a chance the gold could actually pull back a little bit more, but it's just coiling in and in within this mother candle of 21st of March. So I think for the further downside to happen, it needs to get below this 3000 psychological level. Otherwise, it could just keep on consolidating. So it looks like this market is waiting for some sort of a news action, or it is market might be just waiting for something to happen, and then it just makes its next move. And it's also possible that it makes a move right towards the lower end of this trend line. That's also possible. So right now, intraday, fantastic moves in gold, but on the daily basis, just consolidating. Okay, with that, let's take a look at the indices. So we'll start by taking a look at what is happening in Europe with German DAX, and we can see that today it was up quite a bit. We saw that in our metrics in the beginning of the video on the report I produced, and it's just being supported by the 20-day period moving average. Strange kind of price action right here, kind of a distribution but still being held. And if the FTSE 100, I believe, was also stronger today, but it was sold right when it tried to rally. So selling pressure came into it. Sensex, which is the Indian market we are following, and you can see that after having a nice rally, and in fact trying to get above the bearish symmetry, right at the 38.2% retracement, it had a negative close. So that's still a bearish price action in my opinion, because this is what happens in bear markets, that the markets try to take a previous high out but it's unable to do that. You can see that it happened right here as well as a double top formation, and it's also double top formation. So now it could actually move back right into this vacuum right here towards this moving average. So yeah, looks like I think this market actually might pull back a little bit, and then of course we have this kind of a trend line right here, so it could actually pull back right into it, getting maybe even get a little bit lower. Only getting above the swing point on consistent basis, provides a chance that it has a chance to go further, maybe go and tackle these ones, and if it fails from here, then we are looking at A, B, C, D to the downside. Don't think this market is done yet, but it was a very, very strong support right here. Chances are it pulls back towards the middle of the range at least. Okay, now let's take a look at the S&P 500. So there we go, this is the cash market. We can see the market has actually held this support of 13th of March quite well. Now one of the things is that I forgot to mention right towards the beginning of the video. It is our timing model. So I think this is the one I'm using. Here we go. So we have got key timing coming in 31st of March. It has already kicked in with plus minus 2 weeks. And then what we saw was 13th of March coming in, which formed a bottom thus far. So we'll just keep on watching this key level really carefully. This is the timing that we should be aware of. And if we just go back and take a look at the S&P 500, it is holding that 61.8% retracement quite well. Now it's getting into this zone which could be potential resistance. So the market turns, because I'm looking at this this rally thus far with the perspective that it might just be a recovery rally, and certainly it has been a little bit weak, because if you see what happened in the 5th of August, it was a very strong rally, and it has taken 1, 2, 3, 4, 5, 6, 7, 8 days. I think it could take another 5-6 days, just consolidating right here. So it's still a possibility it could fail right into it, and if it does, then there's a possibility we could be looking at A, B, C, D to the downside. On the flip side, if the market is strong enough, and if it's able to get above this gap formation that we see right here, which also coincides with 61.8% eyeballing, gets above this here, then I think the chances are we might have seen a bottom, and then we could be looking at the expansion at least of 1.272 of this entire decline. One of the things with the major bottoms is, it's also my observation, is what I actually like to teach here on the channel as well. The major bottoms are formed in unison, and this is what we saw: 61.8% on S&P 500 cash, 61.8% retracement on NASDAQ 100 cash, and also Dow Jones had some key Fibonacci retracement as well, and we have a confluence of a number of these things coming together. Whereas tops could be, certain indices could top in different time frames, etc. This is just a very key observation, and 5th of August was, a testament to that, because that's where all the major indices also bottom. Also in Europe, we had 5th of August was a pretty good date. So good chance that it could fail right here. We have the timing, we are in the key timing zone anyway, and 31st of March I believe is just coming up quite soon. So I believe the Friday is going to be a really, really important day for the market and price action. And if we just move down to the NDX, you can see the NDX is quite strong and is approaching its 38.2% retracement. It's also getting into this zone, which may prove to be strong resistance level within this zone. So watching this really carefully. But again, this is the 61.8% retracement. We also have this market symmetry, because this decline is similar to the decline of what we saw 5th of August in 2024. So we have a number of things going on in terms of confluence, and the market also got above the 20-day moving average, so the momentum is also improving. So this is 38.2% retracement. I think this is going to be in this zone really, really key for this index. Getting above this, I think it will be a stronger case for the bulls. Really interesting what the market is now doing. And then let's also take a look at this on the futures chart as well. And on the futures, that was the other thing. On the futures, it had also hit the 61.8% on the cash on the futures, and I believe the ES had also done the same thing. We'll have a quick look again, getting above the 20-day moving average. So things are beginning to look quite bullish. So we'll still really taking a look at this with quite a lot of caution, but one thing I'll tell you, I did that video for the US tech stocks, and a number of them, such as Apple making really key pattern ABCD, good pattern formation in Amazon, even Tesla reclaiming that key level. So I mean, we have to look at what the patterns are telling us and operate on the basis of you trade what you see, not what you think. So we'll be just really watching the price action really carefully. This one has already gone above the 38.2% retracements. That's another interesting observation. And if we just take a look at this on the ES, and ES is reaching the 50% retracement. So there we go. It's also above the 20-day moving average, coming up to the second consecutive day. So things are looking interesting. There we go, 61.8% retracement of the 5th of August lows 2024. The market symmetry nearby, all of this. Indices making bottom in unison. So we've got a number of things going on right here. It's only getting below the 13th of March, then that might set up something A, B, C, D to the downside. This is what we are trying to figure out, whether this what we're looking at is actually is corrective, or it's a recovery high, and then it's just a retracement essentially, and a corrective move, or we could be looking at a V-shaped recovery, because this is what we saw here in August of 2024. But look, it was a very strong rally. This one is not as strong yet. Okay, now let's take a look at YM. This is the Dow Jones Industrial, and it has also retraced between the 38.2% and 50%, right up to 50%. Really interesting where it is. So I think that's right into that strong resistance zone. We'll see if it begins to get above that. I think the case for the bulls is improving. And let's take a look at the Russell 2000 because this one was actually, yeah, there you go, the 30.2% retracement still capping. It's one of the weakest ones. And let's take a look at this on the cash basis as well. Yep, so it needs improvement. And now let's take a look at NYA. But if the yields actually come lower, then the small caps should find some friends. Okay, so this one has rally. Excuse me. This one has. Okay, I'm going to delete this one. Has retraced right into 61.8%. Wow. So this one is a really interesting one. It's stronger than the Dow, which is right at 61.8% retracement. This one also has the ADR, so foreign stocks as well. It's also at a really key level. So folks, yeah, markets are, I think this week is gonna be really crucial, and I think we'll find a lot of answers to our questions with regards to this rally, whether it is a rally with legs or it's of a corrective nature. So you know, that I think we'll find out by the end of this week, Friday, another key date coming up for us. But here the important thing I'll point out is, again, the market has respected S&P 500 cash, S&P 500 futures, the NASDAQ 100 cash, the NASDAQ 100 futures, the 61.8% retracements, and other indices at key pattern formations as well. So as long as the 13th of March lows are held, we should be looking at for any signs of this market rally, whether it begins to falter from here, and if we don't begin to see sharp moves lower, I think we should be looking at this, that okay, maybe this rally market might be turning more on the bullish side. So this is what we are looking at, and I will keep you informed. And again, if you found this video of educational value, give it a thumbs up. If you found our technical analysis of value, you learned something out of it, you're interested in the videos, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. And if you want to be on the distribution list, it's free right now for quite some time, because I'm developing the system, and your feedback will be really highly appreciated. I can add you to the distribution list. You can contact me at the email which I'll put in the description. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.